the session Technology Trends, Tech Trends. Technology has been integrated in multiple functional areas of business, and it has given rise to certain trends like Fintech, what we call it as finance technology, Martech, marketing technology, Insurtech, insurance technology, and Regtech, regulatory tech. Now above all, we also have super tech. So in today's session, we are going to discuss Fintech, Insurtech and Regtech. Now all these are technological evolutions connected with finance, insurance and regulatory things of banking, finance and services industries. This will be part 1, and in part 2 we are going to discuss Martech. So let us start with the part 1 of Tech Trends, Fintech. In today's session, we are going to discuss about Fintech fundamentals, definition, evolution of Fintech, key drivers of Fintech growth, Fintech ecosystem and major players, core technologies in Fintech, regulatory and compliance aspects in Fintech, decentralized finance, what we call it as DeFi, and Web3 in finance, Insurtech, that is about insurance technology, Regtech, that is regulatory technology. Fintech is combination of two words, finance and technology. Finance is the lifeline of any organization. Finance activities define the profit and loss status of a company. There are multiple activities of finance inside a business organization. All these activities were recorded in the book of ledger with the accounts department. Initially, when computers were invented, files and records relevant to accounts were stored in the computers, worksheets and then spreadsheets, and over a period of time, simple accounting packages like Tally were evolved, which were used for medium, small size and bigger firms. There was also parallelly a development of databases or Finacle softwares. With the evolution of internet, there were great changes. There was shift in the finance technologies which were used in multiple industries, and these integrations led to greater changes. The changes particularly in the banking sector, the way the finance activities were handled totally changed the set of activities which were happening in other industries. Multiple activities like accounting, payments, bills received and any of these sort of transactions which were recorded changed over a period of time. Lot of these transactions were integrated with the help of internet technologies, and slowly we were not able to see any of these activities occurring in physical terms. It all started with the banks. Banks initially had physical transactions, and then with the invent of lot of machineries and updated devices useful for their transactional activities, there was core banking solutions in place. Now once core banking solutions reached the advanced level, with the help of internet and other network technologies and smartphones, banks from core banking moved on to online banking and mobile banking, and then there was m-commerce, mobile commerce. And today we are at a state where all these activities are happening on a simple device like a smartphone. Now the companies wanted to take advantage of all these technological interventions and moved with Fintech. A simple definition for Fintech is, it is a term for any technology that allows people and businesses to manage their finances digitally. Fintech can include apps, software and other technologies that help with financial transactions, insights and access. Now as we see in this diagram, we just discussed how from core banking solutions to online banking, from online banking to Fintech, we have arrived at this stage. Today, most of the physical transactions like visiting a bank or issuing a check or transferring the funds need not occur physically. Everything has been moved on to EDI, or what we call it as electronic data interchange. We have mobile applications which have simplified the processes. Not only this, there are still multiple other activities and new types of currencies which have evolved, like cryptocurrencies, which have been facilitated because of fintech industry. Now this was made possible because banks believed in the concept like mobile first, data first. Now mobiles took the place of multiple transactions, and they started offering more accessible, easier to use, cheaper and faster transactions. Today, fintech players can tap into non-traditional sources of data and mobile platforms to know more about all these transactions. Not only this, it has also led to analytics, which is useful for understanding in depth what are the data movements or customer perceptions or anything what the company wants to know about the transactions. Mobiles are used by everybody. So one of the key advantage of fintech was inclusivity. They could extend and include each and everybody as a part of this fintech revolution. Small payments, or what we call it as micro payments, were enabled, and anybody from street side vendor like a flower seller to pani puri seller to a petrol bunk operator who would collect the money after filling the petrol, everybody started using QR code or quick response code. That QR code would enable a transaction completion and complete the financial activity which was happening physically. So let us look into some of the key drivers for the growth of fintech industry. Digital transformation, consumer demand, regulatory support and open banking, financial inclusion, alternative lending, secure digital transactions. These were some of the reasons which were the key drivers for the growth of fintech industry. The fintech industry today covers beyond banks, and there are new currencies, terminologies which have evolved. Some of the key technologies which are used in the fintech industry are cryptocurrencies, and we also have like big data and predictive analytics which are used in financial services. Cloud computing, edge computing and Internet of Things with artificial intelligence are also integrated with fintech industry. Finance sector was one of the biggest buyer of technology when we look at the organizational transactions. Majority of the finance activities which were happening inside the company were integrated with the technology because it reduced complexities and it enabled faster transactions. Now when we look at these core technologies today, it could be classified or understood better with these two acronyms. One is, we call it as ABCD. ABCD stands for Artificial Intelligence, Blockchain, Cloud and Data. In basic, B stands for Blockchain, A for Artificial Intelligence, S for Security, I for Internet of Things and C for Cloud. Now these two acronyms will help us to remember what are the core things involved in fintech. Now let us say the number of applications what we are using on our phone are tracking most of the details. A customer journey could be tracked with the help of these transactions. Now with this, we can use artificial intelligence to look into the data movements and the choices and preferences the customer is making, and a concept like self-driving finance could be designed. So self-driving finance is all about a customer making his own set of choices to design his financial plan. Self-driving finance in the future, where financial advice can be personalized with continuously optimized algorithms, and it can be offered to the customer without human intervention. Now what happens in this is an AI based agent will give an advice and customize the product option for that particular person's requirement, financial or age criteria based. So the self-driving agent offers guidance on complex decisions such as home buying, retirement planning or corporate financing. At the same time, it automates the routine transactions such as bill payment and refinancing. Now that was the set of activities which could be integrated with fintech. Now in the second example, which is mostly restricted for stock trading, it's quite reliable to use a fintech enabled AI. Now it's called as high frequency algorithmic trading. Now multiple stocks have been invested by stockholders, and they might be wanting to buy the shares of the stock market for few minutes rise and fall. A human cannot keep observing and do these quick decisions. Now with the help of technologies, within that micro or milliseconds, what happens could be accelerated, predicted, and certain actions could be taken. Now what happens in high frequency algorithmic trading is, these applications have been designed to make the whole process quick and faster. So high frequency trading is an extension of algorithmic trading. It manages small sized trade orders to be sent to the market at high speeds, often in milliseconds or microseconds. To break down this, a millisecond is a thousandth of a second. A microsecond is a thousandth of a millisecond. Now, is HFT legal in India? Yes. In India, the legal and regulatory framework governs HFT activities. The Securities and Exchange Board of India, SEBI, has implemented regulations to ensure fair and orderly markets, including guidelines on co-location facilities, algorithmic trading, and risk management. Now, the advantage of using this is quick profits, and somebody who can't keep gauge on the peak and the movements of share market, which happens within few seconds, can do this with the help of a technology. Now this is a diagram which shows how exactly the number of set of activities will be happening, and how would you be able to understand this complex situation. And this could be smoothened with the help of a intelligent agent, and that is what fintech can help us do. Now these are only two examples what we discussed, but there are multiple fintech benefits which have been integrated in our day-to-day life. A simple thing like QR code, which is used by all of us to make payments wherever we go for buying groceries to any of the online purchases, is a very beautiful example of fintech. Now there are multiple companies who are working towards improvising these fintech products and services. Now let us understand the regulatory and compliance part of the fintech industry. The fintech industry is guided by certain principles like GDPR, PSD2 and RBI guidelines. GDPR is the General Data Protection Regulation, and PSD2 is the Payment Services Directive 2. These are the two distinct regulations in European Union which address the different aspects of data protection and privacy. Now this seems to be like overlapping in terms of personal data processing, and they serve different purpose. Payment Services Directive 2 is a piece of legislation designed to force providers of payment services to improve customer authentication processes, and to also bring in new regulation and around the third party involvement. In India, we have our own GDPR version, which is called as DPDP Act, which was enacted in 2023, Digital Personal Data Protection Act. Now this gives a lot of guidelines towards how the data should be collected and transacted. With this, we also have Reserve Bank of India giving timely guidelines and instructions towards all these fintech industries. Regulatory and compliance automation. Now whenever we make payments through our debit cards, credit cards, UPI or anything on a subscription model or even an instant payment, it comes and double checks with us. Similarly, a SMS or an email is sent. Now these form of electronic confirmations will work for the urban customer. Now how about a customer who doesn't have an email ID, or probably who is not in internet? Now that is the purpose, like SMSs are still enabled on mobiles, which could be useful for people who do not have internet access. Now RBI gives timely guidelines how a fintech company which is executing these transactions should inform all the stakeholders of the transaction. Apart from this, there is also cybersecurity risks and fraud prevention in fintech. We also have a small regulatory framework from World Economic Forum, because today fintech industry and development is not involved only in India. With the globalized business scenarios, we are transacting beyond borders in multiple other countries. DeFi stands for decentralized finance. With the advent of multiple technologies, we were not transacting only with the international currencies and other forms of financial transactions. We came across something called as cryptocurrencies, like bitcoins are one of the best examples to understand the recent spoken buzzword everywhere in terms of cryptocurrencies. So these work on blockchain technology, where the data is securely stored in the immutable format on multiple blocks. So there are many advantages when we look at blockchain technology, which is supporting the decentralized finance. And we have multiple types of bitcoins which are available in the market today. So there are particular set of improvements and futuristic advancements which are happening because of fintech in the decentralized finance section. Similarly, Web3 also has contributed greatly towards fintech. Now, we are still in the stage progressing from Web 2 to 3, while Web 3 has completely not been achieved. It is something what most of the people are hoping to see soon. In Web 1, internet was static. In Web 2, it became slightly interactive, and today majority of the transactions what we see on internet is on Web 2.0. Now in Web 3, the user will be owning the ownership of the data, and he will have the liberty to create and modify the data. Now that is yet to happen. So there are multiple concepts which have been included, like non-fungible tokens, tokenized assets, and decentralized autonomous organizations which are part of fintech. Now there are some advancements which are happening by the time we complete this course. So this is one of the fast moving trends in the present scenario. So we can say that fintech has been changing the traditional way of banking, finance and service activities. Now moving forward, when we look at Insurtech, insurance is part of banking and finance activities. The primary aim of Insurtech is to make the insurance process more efficient, user-friendly and accessible. It refers to the use of technology to improve and innovate the insurance industry, and it comprises of a variety of technological tools, platforms and solutions that are designed to transform how insurance products are created, sold and managed. Today we have insurance covering both the life and the non-life objects. All the steps in the insurance, right from buying an insurance to paying the premiums to clearing the last payments or claims, can be settled with the help of technology. Now it need not be only for the individual insurance things, it could also be involved for the corporate insurance buyings. Some of the features what we can observe in the Insurtech are digital platforms for buying insurance, use of artificial intelligence and machine learning, big data and analytics, blockchain technology, Internet of Things and telematics, which is particularly part of the GPS used for the vehicles data transactions. Now there are multiple new things which have been added to insurance technology as and when it is evolving. Now with Insurtech, we also have Regtech, regulatory tech, to meet the compliances and guidelines. Regulatory tech refers to the use of technology to help businesses comply with regulations in more efficient and cost-effective manner. It involves the application of technology to meet regulatory requirements in industries such as finance, insurance and healthcare, where regulations are complex and constantly evolving. Now, most of the transactions which were happening online need not have guidelines or control. Now regulatory tech is enabling when the data is getting transacted or the information is getting transacted from one point to other point due to the activities, how this information should confirm the set of activities or endorse the security and authentication processes. The main objectives of Regtech are reduce the burden of compliance while ensuring that organizations remain compliant with laws and regulations. It leverages emerging technologies such as artificial intelligence, machine learning, big data, blockchain, and cloud computing to automate and streamline compliance processes. Some of the key features of Regtech are automating compliance, risk management, know your customer, anti-money laundering, data security and privacy, regulatory reporting, real-time monitoring. Now, since most of these transactions are automated, automation compliance like as we discussed earlier, enabling a message as a confirming activity is most important. Since majority of the financial transactions need to be secured, it is important to impose these regulatory compliances on financial transactions. Some of the examples of Regtech solutions are identity verification platforms where it helps the businesses with KYC compliance by automating the verification of customer identifications through biometric data, document verification and other AI powered methods. Also anti-money laundering monitoring systems like where the systems analyze financial transactions for suspicious activity, flagging potential money laundering and helping firms comply with the anti-money laundering regulations. Risk and compliance analytics. These tools help organizations analyze large data sets to identify risks and make informed decisions about regulatory compliance. Now, whenever we do financial transactions, it still comes and asks us, like if I have stored my debit card or credit card or UPI details in the online portal or on a mobile applications, the transactions don't occur automatically. It comes back and asks to the user, do you want to go ahead? So and so transaction is getting activated. Now this is to secure the end users financial activity process. At the same time, the company which is providing the service is also following the secure layer of confirming whether the user is willing to go ahead and make the transaction. Now with Fintech, Insurtech and Regtech, we have understood how tech trends are evolving and contributing to the lot of financial activities in the business scenario. Now another tech trend which we want to mention is super tech. Super tech involves a cutting edge technology for rapidly developing technologies that are considered to be the forefront of innovation. It encompasses fields like generative AI, quantum computing, advanced robotics, immersive reality, and highly sophisticated biotechnology, essentially technologies that push the boundaries of what's currently possible and have the potential to significantly disrupt industries in the daily life. Now, super tech industries are something which are fictional and it is yet to be achieved. But that time is no far, because the tech trends what we are seeing now, the rate at which they are transforming other industries, no doubt super tech is also possible. The highlights of today's session are fintech fundamentals, evolution of fintech, key drivers of fintech growth, fintech ecosystem and major players, core technologies in fintech, regulatory and compliance aspects in fintech, decentralized finance and Web3 in finance, Insurtech, Regtech, and we also mentioned a little bit of super tech. Some of the interesting facts from tech industries, particularly the fintech, and these were the references used in this section. Thank you.